Welcome back, everyone. Today we're going to be talking about day trading with night volumes. I hope this short tutorial brings some value to your trading process. Day trading, guys. We know it's exciting and at times difficult. These intraday markets are often directionless, overcrowded, and noisy, but as I'm sure most of you know, it is possible to create an effective day trading strategy that can help you guys improve your game. So I've spent years observing the US stock index futures for clues from the overnight sessions. I don't necessarily stay up all night, but rather I've created code that helps me see when night volume was high. Quick question, have you guys ever considered night volume as part of your strategy for next day trading? The idea behind using night volume is if night volume is unusually high, does it lead to a volatile day? And likewise, if night volume is low, does it lead to a low volatility day? Now, the idea is that if night trading volume is higher than average, as you see right here, it'll typically be higher during the regular trading session. And the higher the volume, the higher the daily range. And you know you can predict daily range by measuring night volume, since daily volume statistically depends on night volume. Let me explain. On September 28th, we had a nice sell-off in the market. We see that night volume was higher than average represented by the horizontal line right here. And what happened? Right as soon as the market opened, volatility spiked. As soon as volatility crossed the price line right here and it was going up, and I knew that night volume was up, I knew that this trade was just going to be aggressive in one specific direction, down. Now, this is in conjunction with a lot of other things that you want to look at as well in your chart. So just don't rely on this only. This is just one gauge that you want to look at, all right? So what happened that day? You could have taken one trade short and exited at the close and done very well for yourself. Now, here's an example of when night volume is not as higher than the average right here. Okay, it's just right below the average right here. Still, what happened is you had a lot of chop that day. This was Thursday. And I remember this, watching this going, my goodness, look at this. And then boom, any trader would have gotten whipsawed right here and completely had their ass handed to them right here. Then all of a sudden you get, spike right here in volatility. Remember, when volatility goes up, which way does price go? Down. And boom, price came down, and it wasn't until around 2 o'clock that actually price rolled back up again. It went sideways, then came back down again. Very choppy day. So rather than just being a day where price takes off in high volume in one direction, this is a day where volume was below average, and it was really choppy, really nasty, came down, came up, went sideways, came down again. Boy, talk about a cyclic day, right? Oh boy, that's to make most traders vomit right here. So if volume is higher during the night session, guys, just remember it'll likely be higher during the regular trading session. The daily range statistically depends on night volume, which implies that you can actually predict the daily range by measuring night volume. So this is only one measure of directional bias I use in the morning, guys, but I do hope some of you find it helpful in your trading. Thanks for watching, and don't forget to hit that like button and subscribe. Thanks.